Okay, Grand Rising, Grand Rising, Grand Rising, Grand Rising,
Grand Rising.
Grand Rising,
Grand Rising.
Grand Rising. We're gonna start our day with a smile,
Grand
start our day with
Rising.
some energy. Grand Rising. No, I don't think what could be worse. Just wake up in the morning, you don't have no people to say good morning to, or you and the partner's been having a little argument. You know how it goes. When you wake up in the morning, you had a little argument the night before, or whatever it may be. I just want to start my day in the morning with good people, yeah, who share a common goal, who are trying to move that needle, change the narrative, and we just wish each other a great good morning, grand rising, you know, to wake up, look at these markets, learn something new. And it's not just about these markets, guys. It's about, it's about togetherness, unity. It's the fact that we're all up together, whether you're brushing your teeth, driving your car, whether you're just at home, maybe you got your laptop out and you're really going to have a go at it this morning. You're really going to start testing those strategies. Whatever you're doing is that we're doing it together. And I think as we grow older, as we get older in age, this world has a way of making us feel more and more alone. Yeah, more and more alone. Like we're just out here by ourselves, trying to navigate the world. Okay, but not here with unity. We're here together and we're sharing a journey. Yeah, and we want everybody, we want each other to do well. Because when I do well and I learn something new in the markets, or I see an opportunity and I tell you, you can prosper. If I come onto this call and I teach you something new because I learned something new, because I'm a student of the game, I'm constantly learning, then you win. Vice versa. When Alan comes on the call and he says, listen, this is what's happening in the markets, etc., 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 and he tells everybody, we all win. When sister comes and blesses us with some spiritual healing and some words of wisdom, we all win. All right. So that's what the point is. That's what we're here for. But for sure, we are learning together as a family to be animals in this market. I had a conversation yesterday. Your boy's been headhunted. They want me to come and do certain education and certain things and whatever it may be in regards to this space. And what they're impressed about is the fact that, you see, what I teach here is not an opinion. It's not like, guys, there's lots of strategies. There's someone out who's going to turn around and say, guys, at 1 o'clock, when this happens and this happens, if this happens over here, I just hit the button. Yeah, or you have to hit the button. And it works. And let's just imagine it does work. Let's just imagine that at a certain time, 1 o'clock, this happens and this happens, you hit the button, or at 2:30, this happens, and you hit the button. What happens if it stops working? Like, what happens if for whatever reason something changes, because the markets do change, all right? And it stops working. Well, you're just out in the wilderness. You're just out in the wilderness hoping that you can get another flex, that's what I like to call it, a little flex that allows you to take money at the markets. But that's not what I teach. I teach you how to trade. I teach you to say, what is what it is. Whether or not you find some nuances, or you take some of the playbooks that we give out and you make it your speciality. We are teaching on this journey with the family members. We are teaching how to trade. We are teaching how to read this language. All right, let's get straight into it. I'm not going to preach too much today. I'm going to get straight into it and see what's going on. I already took 2.5K out of Euro JPY this morning, but it was a position that I had it on from last night, and we will go over it. But let's start here. Starting my GU, just because it's open at GU, and we're going to go and have a look at GU. Now, what I want you guys to do, and make sure that you're never ever shy, I know nobody here is shy, is if there's something that you need to know. This is the point of these sessions, opposed to the other sessions, opposed to the YouTube sessions, opposed to the pre-recorded sessions, opposed to some other person who says this and that. But the point of this is that we are live and we are in class, we're in session. And if there's something you need to know, you must put up your hand and you must ask. That's the way you learn in school. Don't think you learn by being silent and sitting in the corner, all right? It's not gonna work, all right? So if you have something you need to know, you're like, you keep opening your charts and having this problem, or you can't open your charts, or you don't know where to get a resource, you don't understand fundamentals, you must put your hand up and be like, yo, can somebody help me, please? All right, because closed mouths, use my syllables, don't get fed. Yeah, let me say that one more time. Closed mouths do not get fed. Yeah. Let's go. So we're looking at this GBP USD market, and I am seeing it as bearish overall. All right. I've done this a few times, but it's the same. It's the same every time. It doesn't change. All right. I've seen this bearish. Let's have a look at it. Making lower lows, lower highs, lower lows, lower highs, lower lows. Let me see. Is that lower low? Yeah, just about. Lower lows, lower highs. Now, in my opinion, this is the first opinion I have. This market is going to keep doing the same thing forever and ever 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 until it decides to do something else. Until it decides to do something else. This market is going to continue to do the same thing until it decides to do something else. That statement is 100% correct. I cannot be wrong in that statement. It's going to do what it has always done until it does something else. Okay? So when I see this market doing the ping, doing the pong, doing the ping, doing the pong, doing the ping, yeah, and sliding down, shuffling down here. Let me just turn off my alert. All right, when I see it doing the ping pong, I'm assuming it's going to continue doing the ping pong unless something else changes. All right. So let's get down to our daily time frame, which is just me zooming in. All right. And when I zoom in, we can see how this market was making some higher highs. We can see that from October 2022 to August 2023, this market was bullish, making a bullish retracement. Let's use some language. Language is what separates us from animals. This market was making a bullish retracement because it was going against what the overall trend was. This whole energy was what we call a bullish retracement. Okay? Because the market impulses and retraces and impulses and retraces if it was going down. All right. So therefore, if we're seeing this put here, this is a retracement of this overall bearish market. All right. This is a bullish retracement, an overall bearish market. Okay. We all know that, but just understand we want to use the right language. So have a look at this market. Boom. This is the daily time frame. Let's look at some structure. If you don't understand what structure is, here we go. First and foremost, let's try and get some energy, get some interaction. I know you're brushing your teeth. I know you're wiping the biscuit from your eye. Yeah? Take that biscuit out, man. It's disgusting. Go wash your face. Okay? So, have a look. Why have I drawn my trend line like so? Does somebody know why I've drawn my trend line like this? Anybody? Anybody?
Yeah, the lowest, no, the highest low before the highest high, no.
You're on, but you're just out of sync. So I'm gonna put you back.
Low
It's
before the high.
the last low
before the high.
before the highest high. But you was correct. All right. So I'm not trying to say that you just touch this data point. No, you can't just touch this data point. Good morning, Shakir, and good morning, Alan, as well. Is that I'm saying to you that I'm just trying to draw a line in here, which gives me the general energy of what the market's going. Like the same way I drew this line like this, maybe I could have done that. Or it doesn't really matter. Like look, these lines matter and they don't matter because they are guides. Do you understand? They are not, oh my gosh, I see some people like this for 3 minutes, like 5 minutes trying to get this thing on and some little, like, who cares? It doesn't really matter. You're trying to get it on them to the millimeter for a few reasons. The first reason is this. These candles come from Awanda. But let me show you something. When I type in GBP USD, look at all of these brokers. Look. Loads of them. Loads of them. This is like, there's loads of different places that make sausage rolls. Not that I eat sausage or the rolls. But let's imagine you do eat sausage rolls. All these different places eat sausage rolls. Now, the basic makeup of the sausage roll is going to be the same. It's going to have the meat inside. Pause. Yeah. And it's going to have pastry around the outside. All right, they're all going to be similar. They're all sausage rolls. But let me say, this company here makes a sausage roll slightly different. This company here, you know, they don't get a lot of meat. So they put less meat, more pastry, whatever. They're all slightly different. And every single one of these brokers, I'm going to tell you something for free. The candles are going to be slightly different. The same, but slightly different. Meaning that maybe you might see on this Awanda candle that there's, you know, 4 red candles here, and then you're gonna go to another broker and it's only got 3 red candles and then a green candle. You're like, how come this one's got a green candle in between? And because they're slightly different. They're brokers. Listen to the term of what a broker is. They're like a middleman between the actual price and what you get. Do you understand? So there's a little bit of deviance there, all right, where the market came. So this is just a guide. And yes, Shakir was 100% correct. I must touch the last low before the highest point, because that gives me structure. That lets me know that that's the angle. It's no point, because sometimes I might draw this. Imagine it was like this. Have a look. I was like this, and I drew this line like so. And then for whatever reason, this market did this. I need to find that little ghost candle too, but I'll do it in a minute. Comes down here and even goes a little bit lower here and then makes a higher high. Well, look, I've got to turn around and understand that this market and try and do that. I've got to take into consideration that last low area. So I didn't know at this point when we're drawing this was the last low before this highest point, yes. And luckily the market did start turning around. All right, so therefore, this becomes the structure over here. All right, that's gonna finish in a minute. Hopefully, stop. At some point. All right, so this becomes the structure, the first point of structure. And I think by watching me draw it, you can identify the other structure. Look, structure. You know, we can keep going. You can see these levels, these swing lows, as they like to call them. But let me explain something. There are swing lows and there are swing highs on all time frames. Because in this little push going up here, if I was to zoom in, i.e. drop my time frame, you will see more of these little swing lows within this world here. Do you understand what I'm saying? This here, this little area here, if we zoomed in, you will see swing lows and swing highs in here. All right, so basically this is a break of structure of the daily swing low structure. But in here, there's been lots of breaks of other structure. So let me show you. I'm going to rewind first and then we look at the present. Okay, so I'm going to rewind like this. And this isn't one I made earlier. Trust me, I'm not waking up earlier than you guys and prepping one beforehand. I'm just reading the candles. All right, just like you guys can call another pair and we can go and read those candles also. All right, so this is our structure on a daily time for the market pushing up. Now, first and foremost is I understand this. Let's go over here because this is what I'm running with this week. All right, I'm running with, and everyone knows what I'm going to put in here, my Russian doll theory. I'm not going to say Russian doll theory, but I'm gonna make a Russian doll theory. All right. So a Russian doll is these things. We've all seen them. We know what we're talking. We know what I'm talking about. Okay. And this is the markets. I want you to always remember this as the markets, meaning that your larger time frame. This could be your weekly, and this is or your monthly, and then this is your daily, and then this is your 4 hour, and this is your 1 hour, and then this is your 15, and this is your 5, and this is your 3, and this is your 1 minute. But if you know what Russian dolls are, they open up and you can put the small one inside this one, and then you can put those 2 inside this one, and you can put those 3 inside this one, and so on and so forth. Well, it's the same with the markets. I can put this smaller structure inside a larger structure, and that larger structure inside a larger structure, and that larger structure inside the 1 hour, and that 1 hour inside the 4 hour, and the 4 hour into the daily, and the daily into the monthly. It's the same. The problem is a lot of people don't understand this bigger structure, and they just zoomed in and they just started here on the 5 minute. But what they don't know is they're coming up to hit their head on the top of a 15-minute structure or an hour structure. And then when they're in the hour, they don't realize that they're coming down to hit their knee on the bottom of a daily structure. Do you understand what I'm saying? So it's the same. So right now I'm looking at this market and I'm drawing in that little guide of a yellow line. Yeah, hence my words, guide of a yellow line. And that guide is guiding me. And why is it guiding me? Because that's what it's done in the past. I'm just taking the facts, not taking the fiction. The facts of the matter is this market went from here, went boing, boing. All right, so I'm connecting the dots, just like we used to do when we was young. You know, the picture's random. You connect from 1 to 200, and all of a sudden you've got a pirate ship. That's it. I'm just connecting the dots, and I'm pulling out a parallel line. This line here is parallel to this yellow line to show me some different kind of areas where the market has respected. Look at this line here. We've got some respect in here. We have a little break below it, then it respected it some more. But we have to take into consideration this little level down here. So just, it's a guide to guide my eyes. So if I've got that thought process that we're at the top of this potential level, what do we want to do at the top of any level, of any range? If you go to, I don't know, you just bought yourself, you're trying to do a little venture, and you bought yourself a whole box of iPhone cases, all right? And then for whatever reason, iPhone cases, even though iPhones are going down in value, even though they're going down in value, I don't know, you was able to get a cheap box of iPhone cases that you're going to take to the market and you're going to sell, all right? So for argument's sake, when you get there and you bought your iPhone cases for down here, you bought them for £12 a case, okay? I mean, if you understood that the market has been falling at this type of angle, when you got to the top of this range, what would you be quite excited to do? Bearing in mind you bought down here. You got a cheap box of iPhone cases down here. What would you be trying to do up here?
You sell.
Sell, of course. You're like, listen, I need to sell these. You're not going to be out here thinking to yourself that what I actually want to do is I actually would prefer to sell when the price goes up here. You're not going to be saying that what you want to do is you want to sell from up here. You know why? Why would you not be thinking to yourself that actually what I'd like to do is I'd like to sell when the price goes up here? Why is that, not realistic? Why is that not realistic? That you're like, listen, I've got this box here for £12 a case. I know that it's now, £40 a case, but I'm holding on until we get to £80 a case. If I was your mate and I'm looking at you, what would I be saying to you?
You have to see the past and then see the highest.
Even simpler than that, Shakir. Even simpler. What would I be saying to you? You've seen that the market's been trading down here. Go on. Someone knows.
Price is too high.
Price is too high. Yes, I'd say that. But what I'm fishing for is I just say, bro, what information do you have to say that the price is going to go up there? What is this price based upon? Because from what I can see, this market. Let me mute somebody. I think it's you, Shakir. Let me mute yourself. All right. This market has been trading down within this range. So I'm not trying to say that the market might not get up here, but that might be in 25 years when iPhones don't even need a case anymore. Yeah, because they've been, built into the back of your eye. Yeah. Who knows when it's going to get up here? What I do know is the market's been falling within this range. And within this range right here, just like Shakir said, it would be a good place to sell from. It's at the top of a range. And at the bottom of the range here, if for argument's sake, Shakir, look, he looked like he got a really good price over here because he bought at the bottom of the range. Yes, in his head, he would prefer to buy these iPhone cases when they was down here, when they was £2 a case. Of course he would. But he does not know whether it's ever going to get to £2 a case. But what he does know is the market's been trading within this range, and within this range, this is cheap. So therefore, he bought his cases here, and he was over the moon because he got up here to £40 a case, and he made, £28 profit on each case. So he's over the moon because he had a box of 100 of them. Yeah, making him 2,800 quid profit, and he's happy with that. If afterwards the market starts to do this, he's not an idiot because he sold here. He's not a fortune teller. He doesn't know that the market's going to go and do this. Yeah. So he made the right decision. Now what he could do is go, wait a minute, well, iPhone cases are going crazy. I'm interested in probably buying some more of these cases. And what he does when he saw it break up here and come down here is he said, you know what? This is an all right price. It's all right price to buy at. I know before this was happening, but this is actually an all right price to buy at. And he buys it there. And once again, he'll make sure he sells in a premium. This is trading, guys. If this was the course, I'd be finished now. That'd be it. 30 seconds in, that would be the course. Finish. That's trading. So when we're looking at this here, this range, right now this market is in a premium. Let me say something. Do I know that this market is going to go and turn around here? I do not know. This market has the license to come all the way up to this level. So it can come all the way up here. It even has the license to get a bit cheeky, grab some liquidity, and then start coming down here. Even has that license. Yeah. So I don't know what the market's going to do. And then something might change in the world. Great British pound gains substantial amount of strength against the US dollar, or the US dollar loses huge amounts of strength against the Great British pound. And we could start seeing this happen. All of a sudden, iPhone cases are getting more and more expensive. That could happen. I don't know. I don't have a crystal ball. I don't know. But what I do know is, because I understand how to read this language, just like when I open up a magazine or a book, I'm not confused. I can read the letters, I can put them together and read the words. And after I can read the words, I understand what the magazine is talking about from the first paragraph. Then I read the second paragraph. Then I can do that. And this is the goal. This is trading. Everything else is not trading. Signals are not trading. There's a little flex you can do. These are things I'm not trading. Yeah. If you want those things, they exist. I don't necessarily know how well they exist, but they exist. That's not what I do. I'm teaching you guys how to read this language. So right here, we can see this market pushed up to the top of this range. So in the back of my mind, I would really like to sell this market, but I can't just hit the button. I'm not playing snap with my money, with my funds. Do you understand what I'm saying? Yeah, I need confirmation. So I'm watching this. Have a look. I'm watching it. Okay, we've come all the way up to my line. Interesting. Boom. Now I'm going to show you a few things. The first thing I'm going to show you is that we are on a daily time frame. I'd like to rewind a little bit. All right. We're on a daily time frame. Now, none of us here are going to be taking probably trades using daily candles. Yes, we can use it to inform us, but we're not going to be waiting every day for a single candle. Yeah, you're beginners or intermediates, and you want to be taking trades. You're not going to be sitting around for a month to see something play out. You're not going to learn anything now. All right. So have a look. I'm going to draw some lines. I want to draw a line like this, showing that acceleration in price, like so. As a guide, I'm going to make it a different color so we don't get confused. I'm going to make it pink. And I'm going to drop my time frame down. So I'm looking on the 4 hour now because I can't see any structure properly in that daily. Have a look now when I've dropped it down. I can see a little bit more structure. Can you see? A little bit more of this swing low, pushes up, little swing low, pushes up. You can see a little bit more structure on this 4 hour. Okay. And if I wanted to, I can go again, because like, what did I say to you? Our Russian doll theory. Have a look. Even though this market is doing this, then doing this, then doing this, then doing this, then doing this, in this push, for argument's sake, there is more structure and more swing lows. All right. So if I was to draw another little angle like this, another little line in here, like so, which I'm going to make white. I don't know why these sort of things hiding in the corner here. I'm going to make it white. Watch when I drop my time frame down to my hour. Man can see some more structure. Yeah, I can see some more. I can see higher highs now, higher lows, look, just a minute ago I couldn't see it. It was a mess. I couldn't see anything. All right. Let me push that up over here. All right. Now we're rocking and rolling, because by me drawing my line like this, which Shakir has already explained, and Alan's already given him the correct, definition, then this is the lowest low before that highest point over here. Okay. And I can see the market came all the way up to that point here, boom. And then we started to do what? We started to consolidate. And consolidation is a nice big fancy word for going sideways. You're going to hear someone else talk about and say accumulation. Whatever they want to say, it doesn't matter to me. Say what you want to say. Yeah, because I understand the language. I want to pronounce things in a certain way. I want to use big words. I can speak English. I can use big words if I want. I can also meet people on their level, and I can talk in a way which is understandable, which I think is a lot more important. I've seen other educators in their classes just talk some mad stuff. Yeah, this is the blah, 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 using mad words that they just made up. Why? Why do we want to overcomplicate something that is already quite complicated in people's minds? Yeah. So this market is trading within this range. It's trading within that low and that high, and it's going sideways. All right. Now, I understand that when the market starts to go sideways, there's two things that I can do. I can choose to not trade consolidation, especially if it's a small range. Yeah. Or I understand that the bottom of the range is buy territory. The top of this range is sell territory. But consolidation isn't necessarily something you want to get involved in unless it's a huge range. Yeah, because it's making a decision. It's like, it's not doing something, it's deciding what should I do. And in that decision-making process, it's building up liquidity, which is a pool of money. It's building that liquidity up either side of the consolidation. Yeah, because people are placing their bets. This is like the race hasn't started yet. You're just watching the horses like warm up. You're watching the sprinters warm up. You're like, yeah, bro, he looks dope, this guy over here. Yeah, I've got my money on him. And someone else is done doing the next little sprint in a direction. Oh, no, wait a minute. My man looks cold. Yeah, you're just placing your bets. So there's money for the house to take. Yeah, whilst these bets are being placed. Let's have a look and let's play it forward. And then this market does something. I'm going to drop my time frame down so we can get more clarity. Okay, have a look. Go to 15-minute time frame. This market was most definitely doing the hokey cokey, going sideways. Look at it. It's just a mess. It's not something you want to get involved. You took a trade in here, you'd just be like, you'd be sweating. There'd be sweat dripping from your brow. Hairline would be getting going back. Everything, stress, heart's pushing. Yeah, because this market is just going up, down, up, down, up, down, up, down. It's not doing anything. You're in £10 profit, then you're in £30 minus, then you're in £20 up. This is sideways action. And the market was consolidating and going sideways here. And it even started to kind of do it again right on the brink over here. Let me draw this properly. All right, right on the brink. But boom, this little push down here. Because look, all of this action here is still part of kind of like this leg from this high. It's still part of that leg. It's just kind of within that leg started going sideways a little bit again. But we saw an indication of where it wanted to go to. We saw a correction, and we've seen, let me see here. Because I like to see a close below. I don't know if we've quite got a close below, but what I do like is the fact that this market didn't come up here, it didn't break past the 50% level of the consolidation. Let me put a line in there so we can see where that is. It's approximately about here. All right. If you see the box, say a little middle square of the box, that's 50% of that rectangle. Okay. Let's have a look and just play it forward. I am on a 50-minute time frame. I like to probably zoom out. It's so noisy. All right. Let's have a watch. All right. So let's go back to what I was saying here. I was a bit concerned about this here because this here wasn't a close below this level. Wasn't a close. We want to see and this is a good example. We want to see a close outside of the level. All right. So we don't have to take that one. This market is still doing the hokey cokey when it comes down here and does that. That's fine. That's all right. Okay. But when we get over here, have a look. Now, if I was watching this is all part of the consolidation as it's just doing the hokey cokey. Why is it doing the hokey cokey? Because here's making lower lows, lower highs, lower lows, lower highs, lower lows. And then it came back here and made a higher high. So it's already doing something confusing. But then we've seen the market go boom. And let's see this. Is this our indication? If it is our indication, we may get some sort of retracement in here to close these imbalances. We may do. Okay. And then I want to see a correction. Let me play it a bit slower. Let's have a look. All right, so for me, like this, as soon as this market retraces here, this is a correction. Yeah. Now we have seen that this imbalance has been left, but at the point when this market corrects, we don't know. Let me rewind it. At the point when this market starts to correct, you're seeing green, because remember, at this point here, watch. At this point here, there is other imbalances that have formed. Okay, so if I click this little one candle, have a look. There is another imbalance in here. Now we don't know the market wants to go and collect all of its money. Maybe it doesn't want to collect its money from Shakir, but it wants to collect its money from tomorrow. So as soon as I see this market, have a look, make that retracement and close an imbalance. I still don't know. I don't know whether it's going to keep coming up. I'm now waiting for a closure below here. Or on a smaller time frame, if I wanted to zoom in to start seeing it breaking structure, indicating, correcting, and continuing again on a smaller structure, which I will show you, but afterwards. All right. And as soon as the market says, you know what, I don't want to collect the money off Shakir. I've got this money of tomorrow. It's enough for me to go all the way to South London, and it does this. And closes below. That's my indication. That's my correction. That's my continuation. Now, if I'm very aggressive, that is my entry, my stop above these highs. I would suggest we take into consideration this imbalance. So if I was taking a trade, I would have probably placed my stop about here on this time frame anyway. All right, because this imbalance is something that, I don't know, you might get halfway down the road and you go, you know what? I actually do need some more resources to go South London and come back up here and get that imbalance. All right, but let's put them all in. Let's leave the larger one in, which is taking into consideration the imbalance. And let's also put the aggressive one in. And why do I do that? I do that so that you can decide what type of trader you want to be. Because this trader is more aggressive, has higher risk to reward. He gets more rewards for his risk, but he gets stopped out more. So when he gets stopped out, he's got to either be by his computer, be in a position whereby he can take a trade again, or at least have the mental resilience that he's not going to be like, oh my God, I don't know nothing, I'm an idiot, this trading thing's long, I keep losing trades. You've got to be tough enough to be able to say, is what it is. I'm an aggressive trader, meaning that I'm going to take more else. Like, it's for example, Michael Jordan is an aggressive shooter of the ball. He's an aggressive shooter of the ball. Nobody speaks about the amount of shots that Michael Jordan missed. He's missed a lot more shots than other people on his team. Why? Because he takes more shots. Do you understand? He's not as scared to get that ball and shoot. Where another man's scared and he passes it off to Michael Jordan, he doesn't have that loss on his record. But he also doesn't have the wins. He doesn't have the accolades, of Michael Jordan. It's the same principle. Now, I'm not trying to say one's better than the other, because the guy who passes it to Michael Jordan all day long, he has a role. He has a position to play in that team. He's in the team. Why is he in the team? Because he's great at passing the ball and taking the low risk option, knowing that Michael Jordan is going to shoot. So if you decide that, listen, bro, I'm not going to lie to you, I can't be here looking at I can't be losing 6 and only winning 4 of my trades. I don't have the mental toughness to deal with that type of win ratio. Because don't get twisted. You can only win 4 out of 10 and still be a profitable trader. This is the great thing about trading. You don't have to be perfect. Let's have a look and play it forward, see what happens with this trade. Oh, it's Celsius, Trade decided to move. Now the point I'm making to you is this: is why? What gave me the signal that the trade was going to move was our strategy. Understanding the market structure, understanding which way it's going, waiting for an indication. You saw over here I was a little bit dubious about this play because I didn't get a close below. I got a wick below. And remember, when markets just wick, sometimes they are doing what? When they just wick in a direction and below stuff. When they just wick somewhere very quickly. What does that sometimes allude to?
A liquidity grab.
Exactly. Do you understand what I'm saying? So maybe this market was like, it knew that everybody here may have drawn a little range like so. And this little nam. Was this is what we call a liquidity grab. Nabbed it quickly. And then ran in the opposite direction, came to that 50% level and said, okay, now let's stop ramping, and decided to go. So I want to see closures. I want to see the market closing below. And in this instance, market did this thing. Yeah, your higher risk trade at this stage here. Let's see when it starts to turn around. Your higher risk trade was a lovely 1 to 2.5, to say 1 to 3, and your lower risk trade and your higher risk position was a 1 to 5. Great trade. Don't think it's not a great trade. 1 to 2.5, 1 to 5 trades. This is a good trade. This is me. You giving me 100 quid and me giving you back 250, or you giving me 100 quid and me giving you back 500. Like, you take those odds every single day. Okay, you will take those odds. However, we've seen this market. Have a look at this. Now we're going to get to present time. All right. We've seen this market in here. We've just taken that trade. Fantastic. yippee-ki-yay. We feel good with ourselves. And we're thinking to ourselves that we understand our Russian doll theory, that markets are inside of other structure, inside of other structure, inside of other structure. And we're looking at this push here. Let me go all the way out to my 4 hour, for example, which is a bigger Russian doll than the one I was just looking at. And we understand that below here, this is structure on a 4 hour time frame. Just like this is structure on a 4 hour time frame. We've just, what did I just say? What did Marcus just answer about? We've just done what below that structure? What have we just done below that structure? Based upon what Marcus just said. What have we done below this structure here?
Grab liquidity.
Yeah. And when we and Jay's told you time and time again, when the market grabs liquidity, it's like a thief. It likes to grab liquidity and then run in the opposite direction. So even if I was in that trade, I'd be thinking to myself, right, I don't really want to be in this run back, especially when I can see on the 4 hour time frame. What can we see? A possible reason why the market might want to run backwards. Oops. What can we see? Imbalances. We can see imbalances here. You can even see that one over here that it didn't decide to. This was Shakira's money that he owes over here. Didn't decide to come and get. That this market could now say, you know, I'm going for it now. Cool. Yeah, I didn't want to go for it before. Now I want to go for it. So if I was in this trade, let me show you guys how I get out. How I get out is I'm over the moon that I'm at 1 to 5. And watch, when I draw my lines in, my guides, I want to put that guide in this instance. Have a look. The market was doing this. Yeah. And then it accelerated in this direction. And I have to place this like this because I want to definitely touch the last high before this lowest point. The market's actually broken that structure. It's actually made a very small retracement and closed back above. Let's have a look and see how. No, that retracement wasn't great, but it has made a small retracement here and closed back above. I'd be out of this trade by now. I'm taking my money. Yeah, I've either taken my money down here because I'm so happy that I got my 1 to 5, or by this point I'm breaking structure, making some slight kind of retracements in here. It's gonna take my money. Like, I know when I've won. I've won because I've come to my laptop, opened it up in my underpants, and I've just made £500. Yeah, I've won. I'm a winner. Yeah, I don't need to sit in here and prove something till I become a loser. All right, I'm a winner. All right, and it's very, very important that we understand when we have won in a trade. Yeah. Okay, so let's have a look. Let's see what the market does. Let's put it on a 10 speed. All right, so the market came up here, dipped into our imbalance. Our imbalance that we drew was on a 4 hour time frame. It didn't push very deep in that imbalance though. Just whipped into it a little piece and it came down here. Now, for me, I'm still watching it. I'm still a little bit concerned we're at the bottom of this little range here. Can you see this range? I'm still a bit concerned, even though we pushed a little bit more. And yeah, you're like, oh, in hindsight, Jay, you could have taken a little bit more. But hindsight's fantastic. In hindsight, you shouldn't have dated that girl from school. In hindsight, you should have taken a different way home. Yeah. Nobody knows what's going to happen. I've still won. I took my $500 and my $400. And yeah, it did retrace and did continue down here, because at the end of the day, this area here, where this wick was, is a level of structure. Let me explain something to you. This here is structure, because you can see previously the market, and we can go into this more extensively in another session. The market couldn't break this place here. Bang. We did this quite a lot a few weeks ago. Bang, bang, bang. Couldn't break here. So I want you to imagine an army. There are defenses here. There are men here with Uzis and I don't know, missiles, and there's a real defense that is holding this fort. They're saying no price can get past us over here. And every time it comes up here, man, get a slap, big slap, go back where you're going. Man, come up here, big slap, go where you're going. Man, come up here, big slap, go where you're going. Until Javan goes, listen, I've had enough of this. Yeah, we need to get to the promised land, and I'm willing to pick up my phone, call my cousins. They're gonna come with Chinooks. They're going to come with some different kind of air weaponry and land assaults and I don't know, drone attacks. Yeah, they're coming with the big guns, and we come and we push past. And look how aggressively the market pushed past this level here. Bang, 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 bang. We went and we never looked back. We aggressively broke past this previous level of, someone will tell you it's resistance. Yeah, we previously broke past this level of resistance, and that then becomes a level of structure, because this was the battlefield previously. Do you understand? And when we go past this level now, we're feeling good. Javan's feeling amazing. Yeah, we defeated the enemy. Tamara, who is the voice of reason, is saying, you know what? I really think that we should go back and check this battlefield to make sure that A, we got everybody, and we're not seeing the enemy getting back up off the floor, dusting themselves off, picking up their rocket launchers to come up behind us and shoot us in the back of the head. And also because she's like, listen, we need to make sure we didn't leave none of our own soldiers here. Let's go check all the tunnels, check all the houses, make sure there's no enemies, but also make sure we didn't leave none of our own people here. So sometimes the market will come back to this structure, well, not sometimes, all the times. The market has to come back to this structure where it broke. Yeah. And once it gets there, then it can say, okay, yeah, there is no enemy here. We have left none of our own soldiers here, and say, okay, now let's continue going where we was going. I want you to remember that analogy. Whenever you see a market, a price can't break past a level, that this was the battlefield. So even if you run past it, the market does that to come and check to see what's going on that battlefield. So personally, if I got in a trade down from here down to the battlefield, I'm going to take my money until I see what happens here. Because even if it kicks all the way back up here and then breaks, why would I want to stay in this and make my money go all the way back down to zero? Why don't I let it do what it's doing and then get back in when it breaks again? Let's see what happens. Let me delete some of these things because my chart's looking mad. Let's see what happens. So the market came down here into the battlefield. This is still the battlefield area. It was around this area here. Pushed past it, and obviously remember, guys, our overall opinion is that this market is going to be bearish after touching this big top of the range. Remember, we've been, you can't remember, have a look. We've drawn this yellow line. Our overall opinion is market's coming down. But the whole point is, as day traders, I don't necessarily need to sit in a huge retracement that's going to take my 1 to 5 down to 1 to 0. I don't need to. Yeah, I don't need to. So I would have been out of this trade over here. And to be fair, it came back down to where I was, but after it didn't really do that much. Yeah, we moved a little bit past it, but we kind of started to go sideways in here. Oops. We kind of started to go sideways in here. And then what did we see? Have a look at it. It's so clear when you understand the strategy. What did we see from, whoopsie daisy. What did we see from that sideways action? And I'm going to give you guys a hint so you guys can describe it to me nicely. One of our plays. Go on, what did you see? Some indication where it wanted to go after going sideways. I'd like to go in this direction, Jay, but not after I correct and not after I continue. And for all purposes, don't get it twisted. I don't believe this is the overall direction that you want to be trading in. But if you was a day trader here, and it was Wednesday, was today, and you was trading overnight, this market is, which you wouldn't be, but I'm just saying, this market has shown it wants to go in this direction for a while, and have a look at it. Another profitable trade to the tune of a 1 to 3.5. Yeah, and it got up to this level here, and have a look at this level. Can we see, is this level significant at all? Let me see who's really looking, who's really on job. Is this level significant at all? Now, if I ask you a question, the first thing you should be doing is not looking to the right, because there's no information to the right. Not looking up, because that just makes you stupid. Not looking down, all right? You should be looking left, because left is where information is historically, all right? So is this level significant at all?
Yes, roughly 50% of that imbalance, the hour imbalance.
Amazing. Yeah, because we identified an imbalance before, which I said, this market just came and whipped into it, but it wasn't happy with that. It decided later on when it got down here, like, nah, bro, I'm going to collect my money from tomorrow. No way. She owes me money. And it ran back up into that imbalance, nam, 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 nam. And like Marcus said, roughly dipped in about 25%. All right, if I drew it properly, it's about 25%. It's about like this on this time frame anyway. Look, 25, oh, sorry, 50%, sorry, 25%, whipped in 50% of that imbalance. And then from there, it had a reaction. Boom! Massive reaction. On a 1 hour time frame, that reaction was too big for you to even see, because here was the structure. Have a look. Last low before the high on a 1 hour time frame. But let me show you something. Let me drop down to my 5 for argument's sake. And I don't have a problem with you guys being on a 5 minute time frame. I just don't think you should be less than that as a newbie. All right. So on a 5 minute time frame, have a look. How would I draw my line? Shakir knows. I'd make sure I go and I do this and I touch the last low before the highest point. So where is the structure? As it just, remember the context. The context is Russian doll. The market is going down. The market has just retraced to tap into this imbalance that we know it likes to close. So when it taps into that imbalance, that's giving me already my little spider sense is tingling. And then I see it from here, do what? Break structure, giving me an indication of what it wants to do. And then I see it do what? Make a correction. Which if I move my time frame from 5 minutes to 15 minutes, you'd see this as a correction, is closing imbalance. You want to see it? Have a look. That correction is closing the imbalance that would have opened up in this candle. Let's go back to my 5 minutes. Okay. Made the indication, made the correction, and now I'm waiting for a close below this level because I am disciplined. I have listened in the sessions. I want to close below that level. All right. And I'm waiting. And as soon as I get that close below that level, that is my entry. My stop, aggressive stop, would be above this last high here. And my safer stop would be above that swing high over here. And we can put them both in. All right. So you're going to decide what type of trader you are, there or there. But in this instance, let's have a look. Woo! Goes to hell. Because this is the direction I want to be in. Because I've already identified this market's at the top of that range, premium. I've already identified, thinking about the Russian Gulf theory, thinking about the higher time frame, what's going on a larger time frame. I've already identified what's going on a larger time frame is this market broke some structure in here, or it left some imbalance. So when it came back up and closed this imbalance, I'm like, yeah, bro, if I see structure breaking from in here, maybe it's happy that it closed this imbalance. Now it wants to go, and look at it, it went to hell. Like it jumped out of the window. And then when it got down to here, have a look once again. The market got all the way down to this level, started to go, it had a little sideways action, but you still might have still been in the trade because we haven't brought, let me drop my time frame down so you can see what I'm talking about. Here's a 15-minute time frame. Let me go to my 5-minute time frame. All right. Have a look. You've got this market's pushed down here. You're loving it. You're laughing your head off. Look, this aggressive entry is at 1 to 7.5. What does that mean? That means you gave me 100 quid and I brought back 750 for you. Plus, said to you, hold the 100 quid that you gave me. And you're just like, yes, Jay. Yeah. And I'm standing here and you're looking at this market and you're wondering, should I get out? Well, the market comes down to this lowest point on the 5-minute time frame. And on that 5-minute time frame, if I was drawing a line, Shakir knows how to draw this line. Yeah. Yes, you might have decided you want to do some lines like this. That's down to you if you want to do a line like this. Why is this line like this? Touching this data point and this data point. That's fine. But I'm more interested in that's actually a good data point I drew. But I'm talking about if we haven't got here yet. So if I rewind this, oops, let's use this. If I rewound this to here, for argument's sake, because I'm in such good profits, I don't want to give anything back. The structure here is all the way up here on the 5-minute time frame, or even someone might tell me and say this is the swing structure over here, but there is some minor structure here and here, okay, maybe even here, okay, but the market hasn't broken that structure as yet. So I could still be in this trade. Have a look, and it just hokey cokies, just does a hokey cokey, just does a hokey cokey. And let me show you something so amazing. You ready for it? I touched this data point and this data point, and I created this line, this angle. Yeah? But the market accelerated down here, made me draw another angle, but this angle's still in here. Look at the markets. Came all the way to that place, and then decided to boom, push out over here. Now, is that a coinky dink? I don't believe in coincidences. Well, it went all this journey here, and only when it touched the line from this angle that we took from these two data points, it decided to push down. Because ultimately, this is the bigger range that the market is trading within. Watch. Like this. You see? So when it came back up to premium, we had a sell-off. Shakir was selling his iPhone cases at that point in time. When it came back down to that premium, up to that premium level. Okay? So at that point in time, this market here, thinking about our Russian doll theory, was going sideways in here, between here and here. And then we saw a little push down here, which could have been an indication of where it wants to go. It wants to keep going down. So after that indication, I'm waiting for a correction, and then I'm waiting for a continuation. But if I don't get that continuation, and the market comes and breaks structure against me, sorry, let me turn that off. All right. Then that means it's doing something else. And let's go back to our Russian doll theory. We understand that these markets move in waves. They move like this in waves. And every time they break structure or break structure, they normally have a little kickback. So after this market just pushed down here and broken this structure here, there's a very high probability that it wants to do the whole wave thing and kick back on me. So I'm going to be concerned about that, because I understand this has captured liquidity from down here. So this little wick down below this this consolidation, I have to get a closure below here for me to think it's going to still go. I can't just jump in early. Let's see what happens. The market didn't give me the closure below here. The market actually on a smaller time frame, if I go to my 5-minute, I don't want you any smaller than 5-minute, not yet, started to break 5-minute structure. Look, broke it over here. All right, broke it over here, but didn't quite break this swing level here. Didn't quite break this swing level. Just wicked up here, captured liquidity, ran in the opposite direction again, but didn't break this structure. So therefore, it's making higher highs, higher lows. Now, what am I waiting for? I'm waiting for a break and give me a proper indication. Give me a closure. This is a closure over here. Indication now. If I pull this little box out some more. This is a closure indication where we want to go. This is our correction, which at the moment I still don't know whether it's going to be now is the time to pull the trigger. But then it comes back up here and it closes above, giving me a continuation, meaning that I don't question it. I believe in my strategy and I execute. I'm like the T-1000 Terminator. I ask no question. If something comes in my crosshairs, hits in my target, I'm pulling the trigger. I ain't got no time to hesitate. I'm a sniper. I'm a gunman. Do you understand? I see my target. My job is to shoot. Indicates and closes above these levels. Corrects. And then continues and closes above. I am in the trade. Even if I lose this trade, guys, even if this trade didn't go up here and comes down here and closes, I must stick to my strategy. If I don't stick to my strategy, then I'm just freestyling. That means 1 week you get a good performance, the next week you get a bad, who knows what might happen. I must have some sort of structure to say that I've got an edge. My edge is understanding market structure, price action, waiting for an indication, a correction, a continuation, and many other things that we will learn. There are many other nuances. There are many other playbooks. I'm showing you one out of consolidation, but let me tell you something. If you master this one out of consolidation, it can make you rich. You don't need to know 15 different Kung Fu styles. You're a boxer and you're punching up everybody in your area. Do you know how to do Kung Fu? Does Floyd Money Mayweather know how to do, Russian wrestling? Like, he's not going to go in the octagon in UFC and start batting man up on the ground just because he's Floyd Mayweather. He knows how to box, and this has made him one of the most, if not the highest paid sportsman on the planet, or in the sport of boxing. Does he know Kung Fu? Does he know wrestling? Does he know Kempo Jiu-Jitsu? No. Now, the UFC man's argument is, yeah, he's not a real fighter because if I took him to the ground, forget about if you took him to the ground. He's not going to the ground. He's a boxer. So you don't have to go online, going through ICT to something else, to volume profile, to let me just learn about this, let me just learn a bit about that. That is not the, unless you're trying to just become you just want to, you're one of those guys, you're just collecting papers. You know, the man that are constantly at university, connecting another master's and another master's and another. At some point, you got to use your masters, bro. Collecting them ain't helping nobody. You heard the Kanye West album back in the day. Those master's degrees ain't going to keep you warm or put food in your belly. So if you just was to understand this and learn this, I'm showing you in front of your eyes how you'll be able to prosper. Look at this trade. We're here. Indicate, correct, continue. Let's play it. At this point in time, when we're here at 1 to 3, for example, you would already be risk-free, meaning that you've moved your stock to entry. Yeah, you're not going to go and take a L after your $100 is now $300. That makes you stupid. You're going to at least turn around and say, I'm going to secure in either a 1-to-1 if you really wanted to, or maybe your trading plan is a 1-to-2, and you want to move this stock and say, I'm not losing any more than that, bro. I've got a busy day today. I've got to go to the office. I'm happy if this comes back down and stops me up for $200. I'm happy with that. Or you're going to say, you know what? I think this is going to push up because you looked at the larger market structure. You think it's going to push up to a level and you just want to make sure you don't lose from this trade, but you want to stay in it until it gets to where you think the larger market structure is. And for argument's sake, let me go to the hour and have a look at some larger market structure. You know, maybe you're thinking to yourself, this market wants to come all the way up here. I'm still looking at this imbalance is screaming to me, like saying, wow, saying, I owe Jay a big amount of money and he hasn't come for it yet. Yeah, so I'm thinking maybe this market wants to come all the way back up here, close this imbalance where it broke initial structure. Because there was a battlefield over here where it broke past here with speed and strength. I'm thinking maybe I want to stay in this trade ticket. So let's see what happens. I would have either taken my money because I got to be perfectly honest like this. As soon as this market, and started to go, because this is an hour time frame. Let's go to our smaller time frame. As soon as this market starts to do this, we've got to this highest point here, all right? So Shakir knows, especially if you're in some good profits, and you've drawn this line like so, all right? I'm gonna drop my time frame so it's clearer. Go to the 5-minute, have a look. I don't wanna sit in the market doing consolidation, doing the hokey cokey for a whole evening. So for me personally, hey, look at it, look. Shakir would have drawn it just like this because he would have made sure we touched the lowest low or the last low before the highest point. Yeah. And as soon as I saw this market breaking structure against me, making a correction, and then coming down here, bro, come out, mate. And I would have been good to get out because all it did is just did a little dance. I would have either been here, and in my trading plan, I would have been so happy with the fact that I got all the way up here. I would have taken my money here. Or when I started seeing this stuff happening, I'd be like, yeah. Oh, cool, bro. Maybe I didn't get the whole 300, but I'll take the 200. I'm out. And I'd be good to be out because it just started to go sideways. And I don't want to be involved in this. This is a waste of my time. Look at this. I don't want to be involved in that. and I would have gotten out. So therefore, I wouldn't have been involved in this market coming back down and stopping me out for nothing. I'm not gonna let this money stop me for nothing when I'm up 1 to 3, and I'm seeing structure breaking against me. No way, Jose. All right, and you've seen the market come and continue its journey. Now you're happy about that. You're actually happy that this market now is coming down here and continuing its journey. Why? Because overall, it's the direction you want to be in. Overall, you want to be in this. So look, exact same thing once again. Have a look. Over and over and over again. Let me, I want to wipe my charts because it's getting mad. I'm going to wipe my charts, all right? When this market starts to go sideways, you're going to draw your box once again. Have a look at the box. And then what are you waiting for out of this box, guys? Do you mind me asking? What are you waiting for out of this box? Does anybody know? Does anybody know what you're waiting for out of this box? After you took a retracement trade against the overall trend, back up into this level, then you saw it breaking structure, so you took your little 200, your little 1 to 2, 1 to 3. Then what are you waiting for out of this box? One of our plays.
Indication.
That's right. You're waiting for one of these plays, and what happens? Biddy bingo is the green one. Bingo! You got it over here. And when you get into this trade, you must be looking to your left, understanding that when it goes past this point here, where there is something underneath it that we call liquidity, because liquidity sits below all of these swing lows. What are you expecting to happen after the market? You get this little trade in here. And I'm not trying to say you should take your profits and run. You could do. But after you've got in this trade here, because you was on a smaller time frame, not the hour, you was on 15 minutes or 5 minutes or whatever it may be, and the market comes all the way down here and you're like, oh wow, got 1 to 6. What are you expecting after this area here is penetrated?
The market's turn around and run in the opposite.
Yeah, you're expecting a little bit of a, like, it to say, okay, we achieved something. Now it starts to run back in this direction. Now at this point in time, you have a decision to make, because now you're actually in the trade in the direction you want to go. All right. And it's not necessarily the best entry. The best entry would be right at the top of the mountain, of the swing high. Best entry would have been up here somewhere. Okay. But now you have a decision to make. The decision to make is, are you going to get out of this trade and take your profits here? Or have you got your eye on a larger target? Because the larger target is this market wants to be trading towards structure. Yeah, trading towards where that big bit of little liquidity is sitting underneath it. Because on a bigger time frame, going back to our Russian doll theory, that line would have to be like that, touching this last big low before this last big high. Yes, there are more on a smaller time frame in here. If we drew a little line here, yes. But this is the next place where this market wants to be potentially going. So the question is did you get a good enough entry here that if the market doesn't kick back on you, you'll still be in the trade? Well, we don't know. We don't have a crystal ball. But what I do know is that you are trading the same strategy over and over and over again, understanding that you, obviously I wipe my charts, but you know that we had the yellow line there showing the angle of it coming down. You ultimately want to be in this direction. You do. All right. Let's see what happens. Okay. Let's see what happens. And I'm going to drop to my hour time frame. I'm going to hit play and see what happens. Love, delicious. But guys, I swear I love the charts. I'm not gonna lie to you, I love it, and you will get the love for it as well. But I love these markets. Like, just know that if this was your trade and you happen to fall asleep on it because it's the direction the market's going, that's a 1 to 16 trade. Even if you took it on and put your stop above these highs here and a more lower risk trade, that's a 1 to 3.7 trade. You're just taking money at the markets, money at the markets, money at the markets every time. And look, we are back testing, guys. So this is easier than live. When you're in the trade, it's different. I am not going to lie to you. It's different. You're in the trade. Your anxiety is high. You're like, oh my gosh, I got money. I'm actually making some money from this. Oh my gosh. Now, for the people that are new, go and open up a demo account. Yeah. Make sure you're going to open it. Even if you want to go to FTMO, go to FTMO, sign in and download their demo account. Yeah. Because let me tell you something. If you can't make 5 or 10% in your demo account, the FTMO fairy or the pip fairy is not going to wave the magic wand, and when you put money and you buy a live account, that all of a sudden you can make 5 or 10%. I'm just saying. If you can't take a demo account and on demo be able to get in and out of trades, you're not going to go and spend $100 or $300 or $500 on a 10K, 100K or 200K account, whatever it may be, and all of a sudden now you're just slapping trades. Yeah. But when you get that demo account, I want you to trade it like it's real. I want you to try and put your emotions like it's real. And what I mean by that is sometimes I call it and mind my French, so early in the morning, I call it the fuck it attitude. Sometimes you can have this fuck it attitude. It's like, fuck it. It's only a demo account. I know I put the wrong lot size in. It should have been 10, but I accidentally put in 1,000 or 100. But fuck it. It's just a demo account. Let me see what happens. Let me see if it goes and it makes me 100 grand. Just so I can, show my friends that, yeah, that's the wrong attitude. Because if that was your real money and you accidentally put the wrong lot size in, and every time it moved the pip, it took 1,000 quid off you. Yeah, you'd be trying to cut the losses immediately. You'd be like, whoa, let me close that immediately and put the correct lot size in. That's how you have to trade a demo account. And I know a lot of people don't do that. That's why you're able to see people showing you their demo. Look at my demo results, or look at my results. It's easy to do. You get 2 demo accounts, and every time you take a trade, you take one in one direction, one in the opposite direction. And then you show people the ones that hit. That's it. Doesn't mean anything. Yeah, and there's lots of fake apps to let people fake their results, etc. on our MT5. But the reality is when you look in the mirror. You know if you can trade, or you know if you ain't got a clue. All right, so let's see this market's come all the way down here. It's fantastic. It's done great things on a larger time frame. On a smaller time frame, you might have got out already because you saw a smaller retracement, and that's fine. It's not a problem if that's what you chose to do. But if you're looking at things on a larger time, which I am going to be pushing you guys to be looking at things on a larger time frame, meaning no lower than 5 minutes for an entry. And for example, if I was here on an hour time frame, have a look. Marcus can stay in this trade comfortably because he's looking at this market and he's seeing lower lows, lower highs, lower lows, lower highs, lower lows on a larger time frame in the direction that he believes the market is supposed to be going, and potentially getting down here to take this liquidity. He should only be concerned when he starts to see this structure of this last lower high being broken, being corrected, and being continued on this time frame. So if Marcus took this trade from up here and he was like, you know what, Jay, I'm happy with it. It's risk-free trade. And I want to see if we can get all the way down to this structure. I'll be like, cool, bro. That's fine. Because remember, you're learning. It's experimental. And Marcus might find that he prefers to trade like this. Relaxed, gets his stop in, makes his trade risk-free, and trades to the larger, higher time frame structure. He might find that that's what he wants to do. This wick is interesting because it got all the way down there. And realistically, to be fair, you could say that was to the higher time frame structure. Putting it here also makes sense and doesn't make sense. It makes sense if you believe that the market's going to break this structure. But let's imagine the market doesn't want to break this structure and it wants to continue making a higher low. But then you just mugged yourself. All right. So maybe this was Marcus here getting out right here, happy that we got down relatively to this low. Okay. Someone else maybe is turning around and saying, you know what, I definitely think it's going to break that level and push past there, but I probably wouldn't advise that. I would have got down here on my wick. I would have been over the moon that I took a 1 to 16 trade on the other one, and I took a 1 to 4 trade on a low risk trade. I would have been over the moon there when I see markets breaking structure against me on a smaller time frame. Let's hit play, see what happens. You see? This market broke this level of structure, retraced, closed back up. You've got to be out of this trade. Yeah, on this larger time frame. But here, in my opinion, the market doesn't have to break this structure. The market doesn't have to be strong enough to break outside of this door. You lot are all smaller than me. I am the boss. So when you come up to my market structure, there's not a guarantee you're going to bust past me. So therefore, if I'm in my trade taking profits, I might as well take my profits just before we get to this person. Because if he gives me a big slap and slaps me all the way down to here, I'm going to feel like an idiot. I was up $2,000 and then he gave me a big slap and the market flew in the opposite direction. Now I'm only up $100. I'm going to feel dumb. Because the aim of this game is to take money out the markets. It's not to be a guru and I predicted what was going to happen for the next 6 weeks. That's nonsense. That's vanity. Yeah. So let's see what happens. And bearing in mind, let me do this quickly because I deleted it off my charts and I'm going to finish up, guys. All right. Bearing in mind, we've already looked at this on a much larger time frame and we identified that the market is, that's the premium line. All right, we identified that is the premium line. All right, let's zoom all the way back in, down to my 1 hour. And if you ever want to reset your chart, you click this little cog here, you click auto, yeah? Or you can click reset, same, all right? So we can see here that the market's comeback is here on this level, okay? And it hasn't yet broken this key structure to say that it actually wants to turn around from this yellow level. All right, this swing low hasn't been broken, meaning that the market is currently trading within here and here. That's what it means. Okay, let's hit the button, see what happens. Let me zoom in a bit for the people that are looking on the smallest iPhone known to man. I know they've got like iPhone 2. All right, for you people. Let's watch what happens. What does this look like? Because we're in class now, so I'm asking questions. What did that look like? Bearing in mind I'm seeing this. Have a look. Bearing in mind I can see this.
Liquidity grab.
Liquidity grab. 10 points, Marcus. Marcus has been killing it this morning, catching all the points, getting all the points. Boom, liquidity grab. And when it grabs that liquidity, what does it want to do? Run in the opposite direction. All right? But still kind of keeping to our, let me make this a different color. That little angle, let me make it a different color as well, because we've got lots of that color. Green, yeah. Still kind of sticking to this angle here, this range that the market's trading within. And we know at the top of the range, we sell, because it's premium, and the bottom of the range, we buy. All right? Let me get rid of some of these things here, because these are just in the way. All right, don't want to distract anybody. Let's see what happens. Because remember, the first thing we know about the market is the market can do anything it wants to do. But look right here on the 1 hour time frame, this market has just broken some structure. So I'm expecting, let me make those white. I'm expecting to see that market run in the opposite direction and maybe continue making lower lows. But I don't know. So let's see. Corrected, as we know, after breaking structure, making a lower low, made a lower high, continued down here and pushed all the way down to this level. Now the point is this, guys. I'm going to show you something. I'm looking on the hour time frame and I'm showing this. But when you've mastered and understand that, when this market breaks structure, makes a correction, your entry on a smaller time frame is here. Because on a smaller time frame, this market's going to indicate, correct, and continue. And then your target's going to be that low, but ultimately pushing past that low because the market is supposed to be going in this direction. Okay? And in that instance, you would have got a fantastic entry and the market ultimately pushed all the way down to here. All right? Let's see what continues to happen. Market's going sideways. The market's breaking structure bullishly. Something else is happening now. See? Look, the market started going sideways in here. The market broke structure bullishly. And now this market's going ultimately still trading within this low and this high. The market's in here in a little box at the moment. Okay? Yes, there's smaller structure and smaller trades to take. But this is the reading of the candles. Because look, if I draw a box, because you guys can't see it, doesn't it look like this market's kind of been in here? Look. I mean, previously I couldn't draw this box because it was coming down from here. Now it's kind of gotten in here, and by little liquidity grabs, it's kind of just been in here. All right, let's play it forward, and then we finish. Still trading within that little box. Still trading within that little box. You Yeah, this here was definitely an indication of what he wanted to do. We thought this could have been an indication, but when it turned here, it didn't come back. It breaks structure below. Okay, so cool. This is just, well, this could have been, to be honest, it's so small. That could just be like, just nonsense. It's me. Even to be honest, that should really be on the top of that wick, to be fair. All right, but this was an indication. It came back, did not break the 50% level of the consolidation. In fact, when it got to that 50% level, it really started thinking about it, because I can see it started to go sideways. Started thinking about it, like, we're at the 50% level. Do we? Don't we? Do we? Don't we? If I drop my time frame now, have a look at this. Look at how easy this is, guys. Indicated, corrected, continued. If I was there and I had my finger on the trigger because I'm a Leng man, yeah, I'm hitting the button here, placing my stop above the last high if I'm very aggressive. Or if I'm feeling like maybe the market's going to be choppy, maybe there's news, maybe something's happening, I can place it up here. I personally wouldn't place it here because I think if the market came back up here, it's going to take this level because of the liquidity above here. So I would have decided to be aggressive, and it would have been a good decision as the market came and traded down to that first target, which would have been here, but traded straight through there, zoop, all the way down for a 1 to 6 trade. And look at that blue line. This is the blue line I said to you was the larger structure. Have a look. Going back to our Russian doll theory, this was the structure here that I said maybe if the market's going to continue, it's going to break past that level. It's just broken past that level. Now I'm convinced that this market wants to continue coming down here, but after grabbing that liquidity, it may kick back on me first. Why would I want to sit in the kickback to take my money all the way back down to zero? I will drop my time frame down to a smaller time frame, and when I see it breaking structure against me, I am off, mate. I'm off to see the wizard with my dough. Bond Street. Catch me on Bond Street with my money from my trade. Because if I was drawing a line, it would be like this. Yeah, Shakir knows why. Because I want to catch that last low, which is this guy right here. So the last high before the last low, which is this guy right here, down here. As soon as that market breaks above that structure, retraces, it closes back above. If I'm happy with my profits, that's me, bro. Thank you. I'm having my money. I don't care if this market now does that. Because I can always get back in again. There's nothing to stop me getting back in, but at least I've got the money in my pocket and I can make a decision to get back in. Instead of, I don't have the money in my pocket and then the market goes zoop against me and I'm like, oh my gosh, what have I done that? Because don't get twisted. You will go to the toilet, yeah, and come back and all of a sudden the market's up here and you're like, oh my days. Yeah. So that's why you're either going to move your stop, yeah, so that you can get stopped out and take your profits, or you're going to take your profits when you're happy with it. You've got to know when you won. And believe me, look at this trade here, from there to there, as a 1 to 5.3, you have won. You're a winner. You're not a loser. There's a complete different feeling of you taking a 1 to 1, 1 to 2, or you closing your trade in profits than you taking an L. There is a complete different feeling. You will know when you're a loser. You will feel it in your chest. You know what I'm saying, yeah? Just play it forward and I'm finished. As I've said about 3 times now. Market push. Let me go up here. Bearing in mind, we already said that this market was making Marcus was looking at it and seeing this market making lower lows and lower highs and lower lows on the hour time frame. It came down here, made this lower low, and it made a retracement up into these levels. Let's have a look. What can I see there? Let's zoom out to our 4 hour. Can't see too much. I can see this little imbalance that it didn't come and take. I'm still concerned about this imbalance, but it came up here, wicked. Maybe this could have been news doing this. We don't know. Did a little wick. Let's hit play. Now it definitely came and closed the imbalance over here. All right. So if I was thinking to myself, this market's still going to be bearish, I don't want to see this market come and close above this level here. Because on the bigger picture, Russian doll, remember, the bigger structure, have a look. I can't get my thing behind here, to here, to here, to down here, to lower high, to lower low. This market can't break this high. If it does, it's doing something else. So it coming up here, it's allowed to. Sorry guys. I might be a bit annoyed by it, but it's allowed to. Sorry. Sorry. I know someone's got their headphones in and it's got that all in stereo. So I apologize. So the moment the market's doing out of this little sideways action, made an indication on the larger time frame. Remember our Russian doll. Even on a smaller time frame, it looked like he was in there for the sell bearish, and then here it's gone bullish. On the larger time frame, it's just made an indication out of this consolidation. Indicated, retrace back to 50%. The question is it going to come down and close down below here? You see? Yes, is the answer. You see these? Let me just ask the question. I mean, I've done this about 6 times now in this session. Do we understand how this market is fractal, and how when I'm turning around and saying to you that this thing, this Russian doll thing, is happening on the larger time frames, and then within every time frame falling down, falling down, falling down, and you have to know what's happening on that larger doll to inform your decisions if you're planning on getting inside that doll, being a smaller structure inside the larger doll. Do we get that by seeing this thing happening over and over and over again? Or is it at least clicking for somebody? Please?
Yes.
Maybe? Yes, thank you. At least we got Marcus.
Yes.
All right, no problem. All right, well, guys, on that note, though I haven't pointed out no trades for today of what we're going to be looking at, you can go back and you can back test. Now have a look at well, I want to finish. I do want to finish. We just grabbed this liquidity from below this level, and then what we were expecting after we grabbed that liquidity from that level, come on. What we expecting because it's a bigger structure. What we expecting when this liquidity is being taken?
Retracement.
Yeah, it to kick back, and that's exactly what the market has done. Sometimes you see me go into some in previous strategies, previous sessions, speaking about 50% retracements. This is a 50% level over here. It doesn't mean you just hit the button when it goes there, but it means that maybe that's a landmark for where the market might want to retrace back to. And we can see here some structure at 50% from here, being a battlefield, here. We've seen how the market's been, there is some respect, the market breaking through it and sitting on top of it. The market pushes to the 786. This is the golden zone. If you've been here long enough, you understand about this. It's golden zone between the 786 and the 618. And at the moment, what is it doing? Somebody tell me what it's doing. It's going sideways. So again, it's making its decision. Are we going to stick to this yellow line here, Jay, and do what you think what you think I should do, which is trade down and we're in a premium and start selling off? Or am I going to do something else just to really take the piss, maybe wick up here, then decide to do something and wait for some news, wait for an excuse to do a madness? Or am I going to break structure, indicate, correct, and continue and start making my journey at least down to this low, but ultimately past that low? Well, we shall find out, guys. So if you want GU, draw your box, drop the time frame down so you can see it clearly, how the market's been going sideways, and ultimately put your alert below that box, the edge of the box, and above the edge of the box, and then when it rings, it's going to tell you something. You're going to learn something. You're going to learn, are we trying to break down to the low to here? Because you're going to watch it indicate, you're going to watch it correct. If you're clever enough, you're going to drop your time frame down on the correction and wait for a break of structure indication in the opposite direction, correction and continuation. You're going to get in early, or you're going to wait, and you're going to wait for it to come and close back down below, and you're going to be able to get in on a larger time frame. But that, obviously, there's trades that can happen within here, but they're not tens, and they're not necessarily just because you don't have to go in there and hit the button just because, just because there's an opportunity, because that's you want the best opportunities. All right. Well, guys, good morning. God bless. I'm going to put something on. Oh, fantastic. I'll check it out in a minute. No. I'll check it out. That's your home. Okay. No problem. So I'm going to put something on for us to get into and watch. It may be trading related. Let's go and see what comes up. If you're able to stay in the live room and watch, then great. If not, then have a great day. Go and fulfill your potential. If you are back testing, guys, go and back test. Go and have a play around. Go open that demo account if you don't have one. All right, go and open that demo account if you do not have one, and and start trying to grow your account. Start trying to take some trades after seeing the strategy and feel that feeling of winning. Understand what it means to win. Understand when your greed is going to kick in, and your greed will be like, oh, I'm just going to hold it a bit more. Let me just hold it a bit more. Understand it, because you will feel it. All of those things will happen. All right. So I'm gonna play something by a guy called Trevor Noah. If you know Trevor Noah is a comedian, on Jay Shetty's podcast. You would have seen Jay Shetty if you don't know the name. He's a big personality. He's interviewed everybody from Will Smith to, whoever. All right. And this is called it's for people who feel lost in life. Watch this to find your way. All right. So guys, good morning. God bless. Have a great day. Go on, be special. For the people that have been watching at home or on YouTube, do like, share, subscribe, etc., etc.